Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 6 and we're starting from euro-dollar pair with Petar Yukimovic. EUR-USD has been trading in the sideways at the price of 1.0730, but we see potential for the downside continuation. Due to the short-term downside trend and the potential for the completion of the bear flag pattern, Petar sees potential for the further drop towards lower references. Downside objectives are set at the price of 1.0670 and 1.0640. MACD oscillator is showing downside reading with no evidence for a reversal, which is a good sign for the further downside movement. Key resistance is set at the price of 1.0775. Let's trade with MACD indicator, the next major, GBP USD. Jakub Novak would help us. Further decline became limited because the first test of 1.2548, which occurred on Tuesday afternoon, coincided with a sharp drop of the MACD line away from zero. The second test, on the other hand, occurred during the recovery of the MACD line from its lows, leading to a rise in the pair by more than 30 pips. For long positions, buy pound when the quote hits 1.2588 and take profit at the price of 1.2639. Growth may occur after Bailey's speech. However, when buying, ensure that the MACD line is above zero, or is just starting to rise from it. Pound can also be bought after two consecutive price tests of 1.2555. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.2588 and 1.2639. For short positions, sell pound when the quote reached 1.2555 and take profit at the price of 1.2493. Pressure will increase if Bailey takes a softer stance on monetary policy. However, when selling, ensure that the MACD line is below zero, or is starting to drop down from it. Pound can also be sold after two consecutive price tests of 1.2588. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.2555 and 1.2493. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tapas. Early in the European session, gold is trading at 19.25, below the 200 EMA and below the 21 SMA, and within a downtrend channel formed in early September. Having reached 1953 last week, the metal began a technical correction and is now consolidating below 4.8 Muri and above 3.8 Muri, representing the range zone. In the next few hours, we expect a technical bounce above 1921. to occur, and this could break the bearish trend channel, so the price could even return to 1950. The market sentiment has changed and investors have lost their appetite for risks. This has caused gold to weaken and investors prefer to take refuge in the US dollar. In case the price of gold remains bearish and falls below 1921, we could expect a deeper fall. Hence, the instrument could reach the psychological level of 1900 and even the low of August around 1884. On the other hand, a sharp break of the downtrend channel and consolidation above the 1930 on the 1-hour chart could be seen as an opportunity to resume buying with targets at 1937 and 1953. The key for next few days is to watch the 1921 level and above. The bullish outlook could prevail and a recovery in gold is in the cards. Conversely, if gold falls below 1920, we could expect a bearish acceleration in the next few days. On the 1-hour chart, the Eagle indicator reached its extremely oversold level of about 95 points, which means that we could expect a technical bounce in gold in the coming days. And this could be seen as an opportunity to buy. What about cross-currency pairs? It's time for AUD-JPY, area of Mogmore describes. On the hourly chart of AUD-JPY cross-currency pair, it's clearly visible that the stochastic indicator is getting ready to break above the oversold level 20. And at the same time, the AUD-JPY price movement is halted by the support level formed from the bullish propulsion block at the level of 93.83. So, based on these facts in the near future, AUD-JPY has the potential to rally up to test the 94.26 level. If this level is successfully broken above, there is a potential for AUD-JPY to continue strengthening up to the 94.65 level. But keep in mind that it's on its way to these targets. Suddenly, there is a significant correction to break below the level of 93.53. Then, all the strengthening rally scenarios that have been described previously will become invalid and cancel by themselves. And finally, here's Laurie Bailey with AUD-USD pair focused. Let's have a look. In light of yesterday's Reserve Bank of Australia meeting, which left the interest rate unchanged and described economic risks, the Australian dollar lost 1.29%. It's 82 points. The AUD-USD pair overcome the lower band of the global price channel and the target support at 0.6388. Today's GDP data for the second quarter, which came in at 0.4% versus an expected 0.3%, didn't help the Aussie. With this momentum and technical inputs, the price will likely fall towards the nearest support level at 0.6295. A breakthrough paves the way for the pair to reach the target at 0.6171, October 2022 low. The only question is whether there will be a rest of the lower bound of the price channel. The Marlin oscillator intends to form a convergence. But we only confirm the final picture later on. On the 4-hour chart, the price has firmly settled below the level of 0.6388. There was no breakout above the level after the initial breakthrough. The MACD line is turning down, indicating the direction of the short-term trend up to 2 weeks. The Marlin oscillator is close to the oversold territory, but has not reached it yet. The price can still reach the nearest support. That's all for today. See you online soon and good luck.